Hello and welcome to Mark Austin Trading Tips number 6. Today we are going to be focusing on breakouts, and this is probably one of the most popular trading strategies there is, and it's used by many professional traders and amateur traders alike. There are downsides as with any strategy, and in this case you're going to be buying high and selling low in quite a few cases, and there's also quite a few false breaks associated with breakouts. But if you apply the right approach, this can be very profitable. So what is a breakout? Well, it's simply when price action moves above or below a key area of support or resistance and then continues. So i.e. we're not seeing a false break. Today I'm going to be covering breakouts for a swing trade, and I'll address intraday or sort of day trading breakouts on a future tip. So the most important thing to be doing when you're using this strategy is you need to be picking the most obvious breakout zone. Now, far too many amateur traders spend too much time actually applying the correct entry method for this, when really half the battle is actually choosing the most common breakout zone or obvious breakout zone. I say obvious because the more obvious it is, the more sell and buy stops are going to be placed in these zones, which means that once the market does penetrate the breakout zone, there's a higher probability of a decent follow through. And also, if it's very, very obvious, all the professional traders are likely to participate in the move as well. So when you're picking an obvious area, you want to be avoiding sloping lines like this. Sloping lines are very subjective, and they can be visually read in many different forms by many different traders. The lines can be all over the place. Whereas if you're using a very simple horizontal line, there's not much subjectivity in that at all. So it becomes very obvious and an obvious area where people are focusing on. And also you want to be picking the most obvious support and resistance zones as well for indicators. So for example, the 50 SMA, the moving average, is a very common zone, so is the 100 and the 200. Previous major highs and lows, major Fibonacci levels, and previous major support and resistance zones. Remember as well that once the market moves above, say, a key area of resistance, let's say this is key area here of resistance. Once the market moves above here, this level actually then turns into a major key area of support. So you need to be making a note of these as well. Which charts do you use to pick these obvious areas? Well, you really want to be using the daily charts because they're the most popular charts used by amateur and professional traders. So the obvious areas are going to be on those charts, and you want to be using cash charts as well. You don't want to be using spread betting company charts. The reason I say that is because spread betting company charts are 24-hour, the levels can be distorted quite a bit. So for example, in this case we're using the MA200 last week on the 21st of July, so just a few trading days ago. This was resting at 5875, but on the spread betting company charts it was actually above 5900, so quite a bit of a difference there. There's no use for it being up at 5900 whatsoever. But as I said, all the professional traders are using they're using the cash charts to do their analysis, so you really want to be following what they're doing. What I do is I do my analysis on the cash charts, and then I just apply them to my live spread betting company charts the next day. That's not a problem at all. So once you identified your key breakout zone, you then need a method to enter you in. So last week on the 21st of July, my subscribers received an email in the morning identifying 5875 as a key area for the day. We can see the market opens, it tests this area immediately and then has a strong reaction back. But then in the afternoon, we actually do have the breakout here. So how do we trade this? Well, what I do is I look for a full 10-minute candle bar to actually close above the key breakout level here, so 5875, which is the MA200. And we can see that the candle bar does that. It's this one here, and the full body and the full wick closes above the breakout zone. So you would go long above the high here. or you can enter on a retest, which is also very effective as well. We can see the market breaks above. It then has a very clear retest and false break here. The pro traders are going to be entering on this false break here, and then we follow up through here. Where do you put your stops? Well, if let's say you're choosing 10 points below, it's quite helpful to add a technical stop, which is 15 points. The reason is that if you're choosing a stop area, the likelihood is that many other amateur traders are picking that as well, and the floor traders like to clip these stop areas. So by adding 15 points, you're going to be separating yourself from the herd. Or if you're at your screen, what I do is I do the opposite on the close of the 10-minute candle bar. If I saw the 10-minute candle bar close back below the breakout zone, then I would exit the trade. Profit levels, well, you can either through analysis pick out a high probability zone above, or you can use the length of the previous rejection from this level. So in this case, the market rejects itself at 5875 in the morning. We have a 75-point move down here. So you add 75 points onto 5875, you get 5950. And the market did rise, and it actually did take out. I think the high was 5967. I think it was on Friday, and then it fell back down to 5900. So it quite easily hit that 5950 target. So hopefully you found that useful. As I said, the key really for these breakouts strategies and making them profitable for you is to pick the most common areas, and then just apply a very simple entry method. So I'll be back shortly and I'll be covering breakouts for intraday. So hopefully you found that useful. Thank you.